Hi there guys, it's Joel here from Trendsignal. I'm going to be taking you through today's trade of the day. We're looking at a trade that we had yesterday on the sterling Japanese yen, and this was a buy trade. Now you can see when you're taking if you're a beginner to Trendsignal, you take a phase 1 trade on there, all that happens is you use the starter targets, these green ones down here, and the aggressive stop loss. We've had our sniper signal trigger the trade, so we buy on the close of this candle. So you'd be buying around the 194.61 area, and you're going for a 60 pip target to get up to that green line. If it goes the opposite way, we're going to put a stop loss on there. It's 164 pip stop loss. On a £2,000 account, using 2% of our account, we're risking about 24.3 pence a pip. It means that for this particular trade, if you win this, you'd win about £15. But there are a few other things that we can look at. If you've been following Trendsignal previously, you might notice that we use additional parts of the system to tell us when we can go for bigger targets. Now I'm going to go through those 5 steps here. First of all, can you see this blue line in the middle? Blue just means that the daily time frame, the daily prices are upwards. They're in a bullish trend. And that goes hand in hand with the WT and MT that we have here. They're both green. That means that the weekly time frame and the monthly time frame are also on bullish trend. So with all 3 of those lining up, we've got a trend following trade, which is a good sign. Below that, we've got a CP or a chart pattern. That just means in the last 3 to 12 candles, there has been a particular chart pattern that is set up that's telling us that there's likely to be a more powerful movement when we break through that particular pattern. And then finally, number 5, at the bottom here, there is a trend signal line. When it's going green, that means the general momentum of this market is in the upwards fashion. And what happens here is instead of just winning £15 in this trade, when I've got 3 or 4 or 5 out of 5 of those, I can go for an extended target. And all that happens here is I set my extended target now to 246 pips. So where I was risking 2% of my account to make back about a quarter of that, a little bit less, about a bit more, about a third of that. Now I'm risking 2% of my account to make 3% back on my account. So you can see for this, if it was a £2,000, you're risking £40. Now we're looking to make 60 instead of 15. And that's quite achievable. With all of those indicators there, it's most likely to hit that number. If we look at the previous one here, standard target was 60 pips, but we had the daily time frame, that blue line, we had the weekly, we had the monthly, we had the chart pattern, we had the green momentum, the green trend signal line at the bottom. So all that we did is hit an extended target on there, and there you go, entry to target was hit, and you made a nice profit on there. So that's what we're hoping for this next trade, and hopefully we'll see quite a few of you in there. Those that are already trading phase 1 have got that profit, and next time, yeah, hopefully we'll see you on. And there's a number of different trades that have been triggering recently. Lots of these have been nice and positive, earning quite a few people at high percentage. We're actually up about 150% so far for this year. If you want to learn a little bit more about how we do this, come in and watch one of our webinars, and we'll take you through it. Thank you very much, and bye-bye for now.
Want to learn how to find profitable trades like this? Register for our free trading webinar and discover the strategies that turn you into a confident trader. Prefer a more hands-on approach? Schedule a one-to-one walkthrough with a senior trader. See our software in action and get those questions answered, and take control of your trading journey.